Hey, this is Matt Ting, and today we are going to talk about the roll-up M&A strategy, which I think is becoming a very popular career path for lots of people with investment banking or private equity background. Lots of people with this skill set try to find something that's entrepreneurial and that also involves their deal-making abilities. I've talked on this channel before about search funds, which is when you raise capital in order to buy a single business and improve that business. Well, the roll-up strategy is a related strategy in which you raise capital in order to buy many similarly related businesses. And then your goal is to roll up these businesses under a single corporate umbrella. In the past couple of years, there's been a growing trend for this kind of investment strategy in e-commerce, healthcare services, as well as in software. And I think it's becoming a viable career choice for lots of people with this ex-finance or ex-consulting background. So today we're going to talk about what the roll-up is, why it works, some of the key industries that it's becoming very popular in, as well as pros and cons as you're considering it for your own career. So a roll-up is when an investor buys a bunch of similarly related companies and rolls them all up together. And when I say similar companies, I'm really thinking about individual units of practices or small businesses that really all have the same business model. These kinds of businesses can be operated as a single site, meaning there's a single doctor's office or a single car wash or a single brand, like in the case of e-commerce, and then rolled up under a larger corporate entity. Now, the idea here, if you own several similar businesses in the same sub-industry or the same geography, then you'll be able to more easily drive scale, maybe get better cost improvements when you negotiate with suppliers, as well as replicate best practices across different units. Additionally, smaller businesses tend to trade on lower multiples, especially if you're buying them from someone who's a single operator or who doesn't fully understand the valuation of their own business. But if you roll up a bunch of these sites across different geographies, you'll be much more diversified and you'll have much more scale that tends to command a much higher multiple. For example, it might be a bad idea to own a single fruit stand in Manhattan, but if you own 10 to 12 fruit stands, then you can be better diversified across sites. You can probably get better deals on the fruit when you buy from suppliers, and you'll also be able to understand consumer trends better across the city. Now, the roll-up is fundamentally private equity, and like any private equity deal, it's going to follow a couple of these key steps. From what I've seen, most people start with an investment scope. They'll be looking for a particular kind of business in a particular industry and have that mandate set out. Next, they'll raise money against this idea. And I do think that once you have 4 to 6 years of finance experience, and if you have an MBA under your belt, it's actually relatively straightforward to raise capital against one of these ideas. Now, concurrently to this, it's very important that you find an operator to help operate those businesses. Especially if you're working in a highly specialized industry like healthcare services, it's really important you get someone like a physician or a healthcare operator because it's very difficult to operate those businesses if you only have a finance background. After those steps, it's really the procedure of buying individual businesses and then integrating them together over time. And relative to search funds, I do think this is a pretty laborious process because you're constantly doing M&A, you're constantly purchasing businesses, but that's where a lot of the value is. So let's speak a little bit more tangibly. There are a couple of industries in which roll-ups or aggregation is becoming a lot more popular, and you might have seen this in e-commerce. So e-commerce as a totality has grown like crazy over the past decade, and there are a lot of businesses that are built on platforms like Amazon and Shopify that are actually great businesses to buy individually and roll up. There are also online marketplaces like Flippa and Shopify's Exchange Marketplace that make the buying and selling of these businesses even more straightforward. So the typical e-commerce business is going to buy a bunch of these Amazon or Shopify businesses, and these businesses tend to be third-party sellers of consumer products, and they'll typically have a direct-to-consumer model since they're selling on these platforms. So that's a business that is generally easy to understand as well as relatively straightforward to diligence. And there have been a ton of aggregators that have entered the space. Thrasio is the largest player in the game, having raised an aggregate of $1.7 billion, and they've only been in the game since 2018. Since then, a lot of money has also been raised in the middle market, so I do think this is a viable strategy for private equity as well as individuals. And theoretically, these companies are going to come in, they're going to improve the supply chain operations, building them into their own supply chain network, as well as lending them their marketing knowledge in order to scale that business to the next level. The next big category is healthcare services. I think this is the absolute classic when it comes for private equity. Over the past decade, so much money in the middle market and the upper middle market have really flooded into virtually every kind of healthcare practice. Most healthcare services, generally speaking, are relatively stable. People have to go to the doctor, the dentist on repeated cycles every year. That's perfect for private equity. Additionally, most consumers have relatively inelastic demand when it comes to healthcare services. And of course, there's a lot of information asymmetry when it comes to these businesses, meaning that the operators and the healthcare service providers will have a lot more information than the consumer. And although it's probably a little bit evil, that makes for a perfect private equity business. If you look at most spaces, virtually every single one has been touched by private equity in some capacity. We're talking everyone from family doctors to veterinarians to physicians to opticians. If you can think of any privatized healthcare practice, there's a good chance that private equity has either looked at it or has already rolled it up. Now, that's not to say there isn't still an opportunity. I think a lot of these markets are still heavily unpenetrated. There's lots of white space for these private equity players to play in. It does seem like multiples have gone up across the healthcare services industry as a result, but I still think it's a very good and practical business model. And the third kind of business I think is going to grow a lot in popularity for roll-ups is what I'll call micro software, or really small cap software. There's so many small businesses on these big tech platforms of Facebook or Google or Amazon that serve a very specific niche. It might be something like a Chrome browser extension or Shopify tool or random plugin that really only serves a single purpose. And I think it represents a very interesting opportunity for people to get into. If you think about most of these apps, they're often developed by an individual software engineer or developer that has no interest in really growing it as a business. Additionally, a lot of these tools serve a market or a function that is so small that there's no competition and really no large company wants to play in it. And similarly, there are already online marketplaces like MicroAcquire and AcquireBase, where the whole goal is to sell your online software business. Now, this investing strategy is not new. Businesses like Constellation Software and virtually most technology private equity firms have been doing this for a long time. But I think what has changed is the accessibility to individuals. You can buy a small software business because of how many large platforms there are, and I think this is a very interesting opportunity for technology-focused entrepreneurs. So here are a couple of pros and cons that I think about when I evaluate roll-ups as a career option. So on the pro side, I think the best thing is that you get to utilize your finance skill set. If you're coming from banking or private equity, there's really not a lot of options that you can go into that are going to utilize your deal-making skill set. Especially if you want to do some form of entrepreneurship, there really aren't a lot of flavors or strategies that you can lean into. Another big pro is I think this value arbitrage is here to stay. Even if you're at a small cap private equity firm, generally it's not going to be worth your time to buy such a small business that only one person is currently operating. So that's why I think there's an opportunity for individuals to get involved. There is still a lot of hard work that goes into diligence, raising money, as well as closing a deal. And that's really where the arbitrage is. If you're willing to do that amount of work, then you're going to be the one that benefits from the multiple difference. I think another benefit is that when you build a larger portfolio, you can apply more financial leverage. Banks might not be willing to lever a single veterinarian site, but if you're able to scale up a bunch of these, then you'll be able to apply more financial leverage as well as take out more dividends and pretty much all the other tools that are available to private equity firms. And I think another big pro for some people is that you don't have to come up with an original business idea. Lots of people get stuck at the ideation phase when it comes to entrepreneurship, so this really just inserts you into the middle stages of a business where you're just growing and operating it. Now, on the con side, I think the number one con is finding an effective operator. I think this is by far the most important part of the strategy and why a lot of these kind of roll-ups fail. It's not just about raising capital and picking an industry. A lot of the times, in order to get those operational improvements and manage a scale or fleet of units, you need someone that understands the industry very well. In that scenario, you don't just have to convince investors that you are a good steward of their capital. You have to convince an industry veteran to leave their job as well as work with you and have the same shared vision. I do think this is why e-commerce is relatively more popular because the business models are slightly more intuitive, but I think if you're doing a highly specialized industry, it's difficult without a partner. Another big con is I think doing lots of small deals can be extremely laborious. It's a ton of work to get even one deal done, but if you think about the business engine of a roll-up, you're constantly looking at new deals, you're constantly talking to business owners, and a lot of your job is convincing people to sell to you. The largest roll-up businesses have dedicated armies to the roll-up practice. They have tons of ex-finance or consultant people whose main job is to reach out to people and solicit them. So this is not necessarily an easy career, it's something that will often take lots of work. And the third thing is that I think the geographic opportunity might not always line up with your geographic preferences. Now, it's conceivable that you might just look for businesses that are in the city you want to live in, but from my vantage point, it seems like a lot of the opportunity lies elsewhere. Just like when you're doing a search fund, some of the best investment opportunities are going to be in locations that might be slightly less desirable for a young person to live in. In any case, I think the roll-up is a great strategy for people to employ. I think it's going to continue to become more popular, especially amongst ex-finance and ex-consultant people. And lastly, if you are interested in developing the private equity skill set we've been talking about, we do have a modeling and recruiting course on our website at peakframeworks.com. Thanks for watching this video, and I will see you in the next one.